All right, welcome back to another video of economics. And this video, I will try to walk you through in preparing the cash flow forecasting statement and the statement of comprehensive income, as well as the statement of financial position. All right, now as for the cash flow forecasting, it is only affected by cash-related transactions. So therefore, if any non-cash transaction occurs, it won't be affected into the cash flow forecast. Right. So now I have the case study of legal services company, and this is the information of the first month of operations transactions. Okay, let's get into it. Number one, the owners invested $10,000 in cash for capital. So in this case, we know that whenever the owners invested money, so therefore the cash will go into the company. So in this case, there will be cash inflows. So I'm going to type here capital and then input the number of $10,000. So now we have the total cash inflows for $10,000. Next, paid $800 for July rent. Now, since this transaction number 2 has no information about whether it's paid cash or credit, so we will assume that whenever the transaction has no information on credit, so we will assume that this transaction is paid in cash. So therefore, number 2 is another type of cash outflows. So I'm going to type rent here. It means rent expense. And the amount is $800. So this is basically for July's rent. Number 3, purchased office equipment on credit for $3,000. So this transaction is basically on credit. So there is no money involved in this transaction. So therefore, we are not required to input this transaction into the cash flow forecast. Off into number 4, provided legal services to client for cash, $1,500. Again, since the company or legal service company provided services to the clients and they'll get paid in cash, so therefore there will be money goes into the company. So we'll type in the cash inflows for services or legal services. You can whichever you like, and it's $1,500 in. Okay, number 3 is already done, and number 4 is already done. All right. Now proceed to number 5. Borrowed $700 cash from the bank on notes payable. Now, since the company is borrowing money from the bank, it causes the cash to goes into the company's cash. So it is a cash inflows from the bank, although it's loan, and it's categorized as liabilities actually, but that will be covered in the statement for financial position. As for now, for the cash flow forecast, we simply type bank loan for $700 cash. Okay, number 6, perform legal services for client on credit, $2,000. Now, this transaction is kind of similar with the transaction number 4, providing a legal service. But this time, the legal services that the company is providing for the client is on credit. It means that the client has not paid yet. So it will be paid maybe in the later months. So therefore, no entry will be put into the cash flow, cash inflows. The last transaction will be number 7, paid general overheads for $900. General overheads, it's like the expenses for electricity, the water, the telephone, and all that kind of expenses. So it means that the cash will be used or will be spent to pay those kind of overheads or expenses. So in the cash outflows, I will type general overheads for $900. All right. So notice that I'm using Microsoft Excel. So I already put some formula to it, like this one, the total cash inflows. It is sum up until $12,200, which is automatically calculated by inputting the formula of sum, as well as the total cash outflows, which sum up to $1,700. And now just subtract the total cash outflow with the total cash inflow. It will result the net cash flow for $10,500. All right, so we're done. Oh, sorry. And after that, since there is no information regarding the opening balance, so the closing balance would be the same of $10,500. If there is an opening balance, you need to add this opening balance with the net cash flow. But since in this case, there is no information about the opening balance, so therefore the closing balance would be the same as the net cash flow for $10,500. Okay, so now we have already done our cash flow statement. Next, we're going to move into the statement of comprehensive income. Now, bear something in mind that the statement of comprehensive income is actually, the objective of it is actually that we want to find out whether the business is making money or suffering from loss. So therefore, there are only two components that will be used in the statement of comprehensive income. That will be the revenue, and then that would the next would be the total expenses. Just subtract the total revenue with the total expense. Okay, so now we're going to input the transactions into the statement of comprehensive income. Number one, owners invested $10,000 in cash for capital. So this transaction has no effect whatsoever to the statement of comprehensive income. This, however, will affect the statement for financial position, as it is affected the increasing in cash as well as for the capital. So there is no relations into the revenue nor the expenses. Number two, paid $800 for July rent. These transactions has affected the statement of comprehensive income in the terms of expense. So I will write rent expense here, and I will input the amount of $800. So the total expense now would be $800, and you will notice that at this time the company is suffering from loss for minus $800, which is normal because we haven't put any revenue whatsoever into the revenues column. Okay, next, purchased office equipment on credit, $3,000. Again, this transaction number 3 has nothing to do with the statement of comprehensive income. It will only be recorded in the statement for financial position as it increases the asset as well as the liabilities. Number 4, provided legal services to clients for cash, $1,500. So provided legal services is a revenue, and therefore we need to input in here legal services for $1,500. And now we have total revenue of $1,500 and the total expense of $800, resulting for the temporary profit for $700. Okay, next into number 5, borrowed $700 cash from the bank on note payable. Again, this has nothing to do with the statement of comprehensive income. It will be recorded in the statement of financial position. Number 6, provided legal services for client on credit, $2,000. This one, however, needs to be recorded in the statement of comprehensive income, although the company has not received the money yet. But still, since the service has already taken place, in accounting, we need to acknowledge, or we need to record the transaction whenever they takes place, not whenever the money gets received or got paid. So in this case, perform legal services on credit for $2,000 will be recorded in the terms of revenue. So therefore, I will type the amount of $2,000. The last would be paid general overheads for $900. This is clearly an expense for general overheads expenses. So I'm going to type in here general overheads for $900. So now we have profit for $1,800. Yeah, just subtract the total expense with the total revenue, end up with the sum of $1,800 profit. Okay, the last would be the statement of financial positions, which is now on the right side. I put together so it will be easier for you guys to analyze the transactions. And should you encounter any trouble with the inputting of these transactions, feel free to refer back to this video. Okay. All right, now let's get into it. As you can see here, the statement of financial position, or balance sheet, on the other words, is the statement of how much assets and how much liabilities the business have, as well as the equity that has been invested in that particular company. Okay, so the asset will be on the debit side, while the credit will be consisting of liabilities plus equity. So basically, the formula of it is total asset always equal to liabilities plus equity. Okay, so basically this is the common formula for statement of financial position. So therefore, the total asset needs to be in the same amount of the total liabilities plus equity. Because as you can see in the formula, total asset here is equal to the total liabilities plus total equity. Okay, so let's get onto it. Number one, owners invested $10,000 in cash for capital. So this transaction affect assets in the term of cash. There will be an increasing in cash for $10,000. And aside from the cash, it also affects the capital, the equity in the form of capital. So we need to type here capital and $10,000 for the amount. As you can see here, the total asset and the total liabilities plus equity is in balance for now. Okay. Now, number two, paid $800 for July rent. All right, since this is an expense and it paid in cash, so therefore I'm gonna have to reduce the cash, and I'm using the formula like this, close to, and I'm just going to minus the cash for $800 like this. So now the cash balance is $9,200. Nothing changed for the liabilities or the equity. Next, number three, purchased office equipment on credit for $3,000. Office equipment, it's considered as an asset. So I will type here equipment, and the value of it is $3,000. Now, since the company bought the office equipment on credit, it causes the liabilities to increase in the terms of payables. All right. So whenever you see the terms payables, it will be categorized as a liabilities. All right. So the liabilities now, or payables now, is $3,000. Okay. Next would be number four, provided legal services to clients for cash, $1,500. Again, the cash is increasing. So I'm just simply put the plus sign with the $1,500 on it. And the cash balance now is updated to $10,700. Next, moving on into transaction number five, borrowed $700 cash from a bank on notes payable. Again, like I told you before, this transaction affected the cash. So therefore, there will be an increasing in the cash for $700. As well, it will be increasing in the liabilities because the company borrowed from the bank. Yeah, as you can see here on note payable. Note payable is as the name implies payables. So it means that the money borrows the money, the company borrows the money from the bank. So I will just simply type bank loan and type the amount of $700. Okay, now moving into transaction number six. Perform legal services for client on credit for $2,000. Nothing affected in the statement of financial position. And the last would be paid general overheads for $900. So this one, however, will decrease our cash for $900 since the expense is paid in cash. So our cash, therefore, will be decreased. So now we have the total asset of $13,500, and the total liabilities equals to $13,700. Okay. Oh, sorry. For number six, perform legal services for client on credit. It will add or will increase the what we call receivables. Receivables. Oops, sorry. Typo. Receivables. Receivables means we already perform our services, but the client hasn't paid us yet. So it will cause the receivable, which is part of an asset, to increase. Or in Bahasa, it's called tagihan. So receivable will increase for $2,000. All right. So now we have the total asset of $15,500, and the total credit, which is the total liabilities and equity, equals to $13,700. So now we know that this is not balanced, because the credit side we still lack of amount of maybe around $1,800. So here I will type profit. We know that from our statement of comprehensive income, the companies managed to generate profit for $1,800. So this profit will be included in the statement of financial positions, $1,800 like this. So now the total balance will all be equal, $1,500,500 on the asset side or the debit side, as well as on the credit side is total to $15,500 as well. All right, so there you have it. And I hope these explanations will make you understand more about how to prepare the statement for cash flow forecasting, statement for comprehensive income, as well as the statement of financial position. So feel free to refer back to this video again should you encounter any difficulties. Okay, thank you for watching, and I'll see you in the next video. Bye.